Hi, welcome to the market view for the 15th of January 2014. What we're going to do in the market view is have a look at what the market's actually doing on the overnight and then see if we can use this information to sort of forecast what the market's likely to do during the trading day. The best way to do this is to start off with the daily chart and have a look at the background of the market. The background of the market can give a lot of information as regards to what is likely to occur during the day's trading. So if we have a look at the daily chart for the British pound, we can see that the market has made a high up here. Let me just have a look and see what this is. Let me just reduce this slightly. So 166 is the high for the British pound at the moment, and then we've got a low down here around the 163.50 area. So we've got a trading range at the moment for this market. We can see where some selling came into the market's found support and then has tried to trade back towards the upside there. It looks around about a 50% retracement. For those of you that use Fibonacci will be able to see this. For those of you that don't, if you come to the markup tab and then annotations, you can use the Fibonacci retracement tool to see how far a market is likely to retrace back to its previous high or previous low in a down move. So what I'm going to do here is just to click on the retracement tool there. I'm just going to click on the top down to the low there and then draw this in. So we have a 62% retracement there. And this level, 62%, is likely to be a resistance area, and this is what we're seeing in the market at the moment. Conversely, we can use this to the downside as well, because as we can see, this market's stuck in a bit of a trading range. So again, just left click on the Fib retracement tool there, and this time I'm going to click on the low first because I want to measure how far back the market's come. We can see that we're more or less close to the recent low here, so I'm going to click on the low, then up to the recent high there, and we can see we're stuck at 76% and 62 as well. This is a fascinating tool to use. I don't want to go too much into this at the moment. What we're looking at is the background of the market, but I can see that this market is stuck between a trading range of 163.79 and the 62 there at 165. So like yourself, I don't know what the market's going to do. That's going to be dependent upon the news, which brings up another point. So before trading, I'll have a quick look and see what news we've got out today. So in the UK, there's nothing for the UK. We've just got the US today at 1:30. We've got the PPI figures there, and then Carney's going to speak for the UK at 2:15 this afternoon as well, so keep that one in mind. The market could be volatile at the time, especially if he said he's going to continue with QE, or interest rates are going to go up in the near future, if he's changed his mind on that. So keep that in mind at 2:15. You might get a bit of adverse price activity. So now we've established the background, the market is stuck in a sideways range, so we can expect the prices so far to continue in this sideways range as well. So let's look at the smaller time frames, starting off with a 30-minute. Yesterday I recorded a video on this trade, showed the live trade of 30 odd points. In the afternoon we had a new signal. Well, just before that, you will also see in the video recorded yesterday for the 14th of January, when the news came out, this is the CPI figures. I did indicate at the time that the market would find support at the 164 and then likely to move higher, which it did. Unfortunately, we didn't get a signal, but even so, there are techniques again which I will show in future market views, where you can actually get into these sort of trades without the PTPs by reading the market and what's actually going on in there as well. Just to give you a tip here, how I was able to establish this, we've got the market trading down to the psychological level of 164. The volume is very high, so we know there's some selling around in this bar, but guess what, the selling disappears here and we see the market sort of testing, as it's known, where they push prices down, no selling around, and then they do the same here in this bar and again the volume is now much lower, so the selling's disappeared and prices move higher. This green bar here where prices are moving higher is what's known as a no demand bar. Again, we'll get into this in more detail. And then we see the market trading back up, and funny enough, when we get back to the 164.50 area, we see some selling come into the market. It's around 130, so US news pushing the market back down. Again, the selling disappears, and here's an interesting bar here. We've got this buying coming into the market. It comes off the high, but it sits on the DP line. You can see there we're now sitting on the DP support, and then prices move higher. We had a signal, and we can see there's a black dot here, but that doesn't mean to say it would have been a loser, and it's highly unlikely it would have been a loser. I was out yesterday afternoon, so didn't do this trade, but the market moved higher. I'm just going to mark it back up for you, and something very important to keep in mind here. We can see the market moving higher. It trades through the psychological 165, I think sorry, 164.50, and then comes back. Now this is back at the entry price. The entry price is near this psychological level, and having moved from down in the 163.50 area during the morning all the way up here, then it's unlikely that the market's going to have the steam to continue higher. So had you taken this trade, that's the first point. And secondly, the market sat at the break even for at least 2 hours, and we're getting close towards the end of the trading session as well. And even so, just even before the close, the market comes back to the break even area. So really you shouldn't have lost any more than the sort of break even and a few pips. So even though this shows a loss of 33 pips, that isn't the case, because the market was going over to the night session, which you don't really want to leave open unless there are special circumstances in which to do so. So on the overnight, we've seen the market trade all the way back down to the new set of pivots, and at the moment we're sitting at the DP area. We're just below it, so prices could shake to the downside first, out to the psychological 164 and then back up. But using the DP theory, if the market's below, generally lower to start with, but we do have support here. So if the market shakes out down to here, don't be surprised to see buying come into the market and then reversing back to the upside. Keep in mind there's no news this morning from the UK, so there is nothing until 1:30 this afternoon, so the market is either going to be lackluster or it is going to shake out to the downside and then move back towards the upside based upon what is in the daily chart there. Okay, that's it. Let's keep it brief. That will do for today. If there are any trades, I will post those later. In the meantime, have a great day. Thanks for watching, and I will see you in the next video.